key.
I think it's because like school doesn't teach us any of this sort of stuff. They don't. It's a very grey area. They get you ready for employment. Like, what do you want to be? A teacher, a fire engine man, a police officer, But they never go. You want to be this thing called an entrepreneur, and they won't tell you what's wholly exclusively like these are like new terminologies that you have to almost learn after uni, or if you don't choose to go to uni and you end up doing a business, then you have to sort of work it out as you go along. And it's normally a big shock after your first year in trading business, because you go to your accountant and he'll ask you for a whole heap of things like, where's your receipts? And it's like, I didn't know I need to keep them, and oh, where's your business account? Well, I didn't know I need to set one of them up. I just use my personal account. So it's a little bit of a grey area. Like, for example, like if I was going to go to a networking event and I was like, look, I've got a big brand. I have to look 10 milli guy, for example. So I definitely need a new blazer. I don't want to be wearing a blazer that I wore before, and I want to look the part because it might get me a handshake to make more money.
Mhm.
Is that blazer now a business expense?
There are a few things that HMRC are very clear on. And clothing, if it has a duality of purpose, which means you personally benefit, and yes, it could be for the business event, but also you wear it, it makes you feel good, it's not allowed. However, there are a few variations of that. If it had your logo everywhere and it was marketing and branding, that would purposefully be for the business, because when you're wearing it, people say, there's Sean's business, there's John's business. That's okay. Or if it's safety equipment, which you wouldn't really want to wear to a
So
business
basically,
event.
just get Sean Land
Yeah, just a
embroidered on
tiny
hair. A little stitchable one that can be removed.
yeah.
I love that, man. I love that. Is it true that you can write off everything as a business expense?
No, that is not true.
Where do you sort of draw the line?
It has to be related to the trade of the business. Expenses are allowed in a company because they allow for the company to make a profit, and then the tax goes to HMRC and the government for spending. So if it allows the company to employ more staff, more people can see it, you can make more sales, it's allowable if it's for the company. All businesses are different. That's the key thing here.
There's a rumor that hiring family members can save you on taxes. Is that legitimate, or is that a risky move?
Absolutely, it's not risky. There's a few rules. Employing staff and employing family is no different as long as they have a role in the business and it's at market rate. What you cannot do is put mum, dad, Sally, the dog on a payroll scheme and they're not doing anything. Emails, admin, social media, packaging, anything that actually supports the business and they're paid at a market rate, absolutely. I'm a massive fan of the family unit. It's how you can utilize the thresholds, keep as much of that cash as possible, and it stays in the family.
How young can you have one of your kids working in your business?
So there are different rules for the ages, but 13 part-time, 16 more hours, but there's a threshold of 13, 16 goes up to full-time.
Okay, so you can have a 13-year-old.
Yeah, there are specific rules, and it depends on, it cannot affect their schooling hours and it can't affect their life, but it needs to be legitimate too. So there needs to be a record of something they're doing. So if you were taking a photo shoot and say you were selling kids clothing, rather than getting a child in to wear the clothing, you could pay your family.
Yeah. Or if, like, for example, my 15-year-old daughter, she was doing some of my social media for me.
Absolutely. And they are better than we are because they've got a finger on the pulse of everything that's changing within the social media world. So it makes a lot of sense.
Mate, they're born with an iPad in their hand.
Yeah, I know.
You know what I mean? That's just normal to them. That's just like, putting their underpants on. Do you know what I mean? It's just so normal. There's something massive happening in the markets right now. So at the time of filming, this is December 2024, and we are currently in a bull run cycle of the crypto space. So we got cryptocurrency, you got the big daddy Bitcoin, you've got Donald Trump singing and dancing all about it. You've got the guy who invented, is it the Shiba coin? Elon Musk starting to work with the US government. And right now, I think if you are invested in crypto, you would have seen your crypto portfolios pumping right now. Bitcoin has just shyly missed 100,000, but they're tipping it to go to 115, 120, and it's like the new digital gold. But along with this, obviously comes taxes, capital gains tax. And being that crypto is such a new space, a lot of people are a little bit confused about what are we gonna do in terms of like, do we sell? Is it the normal capital gains threshold? Is there a clever way to do this? Some people are talking about, hey, you've got a portfolio worth a lot of money, go to the bank, get a loan against it so it's tax free. Can you shed some light on some of the cryptocurrency space, on people who are going to be making, profits in excess of like 20, 30, 40,000 pounds? What is the tax-free amount, and how that all works?
There's a few things to consider. Most people who invest in cryptocurrency are doing it in their personal name, so they would pay capital gains tax.
Right.
If it were in a company, which can be done, it would be taxed under corporation tax. Labour have just had the budget, and it wasn't as bad as everybody thought, but it was still pretty bad. They've £40 billion worth of taxes are being collected, and part of that is they've increased capital gains tax. So it was at a 10% and a 20%. Now it's at a 18 and 24%. Lots of people anticipated this, and they were selling lots of their personal assets, such as cryptocurrency, to crystallize those gains before that event. There's not too much you can do due to the numbers the gain they've made. So you can sell £3,000 worth of a personal asset tax-free per year. It was 6,000, and before that it was 12,000 and above. They do not want you disposing of this and not paying tax anymore. There's a massive uncertainty with HMRC about cryptocurrency because it's so new. It's so easy to transfer between coins, between wallets. It's not going through the banks. There's massive uncertainty. They are doing their best to work out who has what and when they have sold. And something that is key is the taxation point. It is not when you sell your cryptocurrency portfolio and get the cash. It is actually when you switch between coins. So if you have Ethereum, Bitcoin, XRP, if you make a trade between XRP, which is doing very well right now, and Bitcoin, that's a taxable event. But it's behind closed doors, because usually if you sell something, either you give me cash or I transfer you money. There's Coinbase, Binance, lots of these platforms. Nobody really knows what's going on. They're hoping people are as honest as possible. But human nature, there's greed. People don't understand the tax system. People don't know they have to file a self-assessment if they have a PAYE job and they've purchased some cryptocurrency, which was the new thing. And all of a sudden, they have a tax liability that they're unaware of. So there's lots of uncertainty. A slow way to release cryptocurrency is selling a small amount per year. But due to the volatility of cryptocurrency and the emotion involved, are people going to wait 12 months for the next £3,000 they can sell? Their portfolio may have halved, it may have tripled. It's an emotional thing.
What about when their portfolio goes up or down? So in the bear run, as they call it, so that's when everything hits the floor, and it's not, you have booms and busts in cycles. So during the bust sort of stage, your portfolio might have been at 20 or 30 grand, and now it's hitting, but that was in last tax year, but now it's like 100,000, 120,000. Is there anything that you could have done, or only when you switch the coin and realized that loss?
Something that's very key is if you have made a loss, and not on paper, I mean you've sold the coin and you've taken a loss, if you do not register that loss within 4 years, you cannot carry it forward. And what that means is if you have a £10,000 loss, the same as a limited company account, and you make £10,000 the next year, your taxable net figure is zero because you've lost 10,000 and you've made 10,000.